So this just doesn't make sense, right? This 7% decline, it just doesn't make sense to me. You know, if you zoom out 5 days, like this just completely doesn't make sense. Now, this video may not be as polished as my other videos, but I've been trying to crack my head around everything going on surrounding Alibaba and trying to figure out how does this actually impact Alibaba. Like, you know, when you see a decline like this, 7% in a day, when you zoom out, you see it's down 8.5%. You might think maybe Alibaba's done something wrong. But with all of the news reports that's surfacing, I'm trying to figure out, like, what's Alibaba got to do with this? So let's just take a minute. Let's ignore the noise for a second and let's just follow the facts, okay? So more than likely, you guys woke up to this news report from CNBC this morning saying Hong Kong's Hang Seng Index closes more than 4% down as China tech and education shares plunge, all right? And then you've got Hong Kong listed shares of tech giant Tencent slipped 7.72% on Monday, while Alibaba dropped 6.38% and Muay Tan fell 13.76%. All right, so that was one of the bulletins of the headlines. And, you know, when you scroll down, you read a bit more information about it, okay? So this is where they go into more detail, okay? So those losses came after China's antitrust regulator ordered Tencent, right, to give up its exclusive music licensing rights and slapped a fine on it for an anti-competitive behavior, marking yet another development in Beijing's ongoing crackdown on its domestic internet titans. All right, so that was a fine to do with Tencent, okay? And if you dig deeper into what actually happened, you can see here that China orders Tencent to give up exclusive music licensing rights as crackdown continues. Now let's look at some of the details of what happened, okay? The State Administration for Market Regulation on Saturday ordered Tencent to give up its exclusive music licensing rights and slapped a fine on the company for anti-competitive behavior. Okay, anti-competitive behavior from Tencent. The competition watchdog ordered Tencent and its affiliates to relinquish its exclusive music rights within 30 days. They are to end requirements for copyright holders to grant the company better treatment than its competitors. Okay, in response, Tencent are not even fighting it. They have pretty much put their hands up and said that they will comply with all regulatory requirements, fulfill our social responsibilities, and to contribute to healthy competition in the market. They did wrong. They did wrong, and they have held their hands up, and they have essentially admitted to their anti-competitive practices. The State Administration for Market Regulation on Saturday imposed a 500,000 yuan, so that's $77,000, on the company, citing violations in its acquisition of China Music in 2016. All right. So following the acquisition, Tencent owns more than 80% of exclusive music library resources, giving the company an advantage over its competitors as it's able to reach more exclusive deals with copyright holders. So I'm reading this and I'm thinking, okay, so this is what's going on with Tencent right now. How does this affect Alibaba? Like, how, in what sense, in what world, in what way does this impact Alibaba, apart from the fact that it's a Chinese stock listed on the US stock exchange? Because this is Tencent doing the dirty. This is Tencent doing wrong. And to be honest, there's similar debates being had right now with regards to anti-competitive practices with Apple and, you know, their app store. Also with Facebook, you know, buying up competition. You know, Google, Amazon having a monopoly. It sounds very similar to what is happening to these US giant stocks. You know, the same thing is happening with Tencent. And I'm reading this and I'm looking at Alibaba and I'm thinking, what the heck is going on? Like, how does this affect Alibaba, right? Okay, so that's the Tencent side, all right? When you look at the education side, okay, so education stocks also plunge, okay? So education shares plunge, right? Let's do a little bit more digging, okay? Another group of US listed China stocks plunge as Beijing regulators crack down. Educational training institutions are banned from raising money through stock listings, while foreign capital cannot invest, according to a copy of a new policy document seen by CNBC, okay? So the report comes as Chinese authorities stepped up restrictions in recent months on the private education industry. Chinese authorities have ramped up their crackdown on after-school tutoring companies by unveiling a new set of sweeping regulations that bans the firms from making profits and raising capital from overseas markets. So here is the nitty-gritty, okay? Tutoring companies that teach school subjects are now required to register as non-profits, okay? They are also banned from raising capital from overseas investors or through public listings. What's more, authorities will stop approving new tutoring companies seeking to teach China school syllabus and require existing ones to undergo regulatory reviews and apply for licenses. Fair enough, all right? The companies found to be in violation will be rectified or eradicated according to the rules without further elaboration. Now, the after-school tutoring industry has been severely hijacked by capital. This is the problem. This is what's going wrong. And in recent years, this has led to money-burning wars and excessive advertising, the Ministry of Education wrote on its website. This runs against the nature of education as welfare and harms the normal education ecosystem. Again, I can't see anything wrong with what they're doing here. But more importantly, and more on topic, is how the heck does this affect Alibaba? Guys, I'm really struggling to put two and two together here, because I'm looking at Alibaba and I'm like, I'm seeing this headline. I'm seeing tech stocks. I understood what Tencent has done. You know, they're getting a smack on the wrist. I'm seeing the education shares plunge. Again, we've now seen what they've been doing, which some can argue is a bit unfair, taking advantage and hiking prices and hijacking capital, as they've said here in this article. But again, what does this have to do with Alibaba? I keep coming back to this. Like, how will this impact Alibaba's business? Does this change the fundamentals of Alibaba as a business? I just can't see how it does. Will this impact the expansion of Alibaba going forward, especially with their cloud software? I just don't see it. Will this stunt Alibaba's growth from a business point of view and also from top line and bottom line growth? Again, I just don't see it. I'm seeing all these news reports and I'm trying to think how this links to Alibaba. If I am missing something, please comment in the section below. I would love to hear what you have to say, because I would like to educate myself further. Now, argument that I have seen, right, and this was from Tom Nash. Okay, Tom Nash, quality YouTuber. I really like his stuff. He says here that, you know, Didi falls on report of potential unprecedented penalty in China. So that's an update, all right? And here's, I think, where a lot of the fear, maybe the FUD might be coming from, is because regulators are considering a fine, which they probably will fine, because they fined Alibaba 2 billion, so they probably will fine, possible suspension of certain operation and or forced delisting or withdrawal of Didi's US shares. And this is the word here, this delisting word. This is what's getting people fearful, I think. But what did Didi do? If you're not familiar with what Didi actually did, they did the dirty. So Didi Xuxing forced its way to a New York listing, triggering data security review, sources say. All right, let's look at what they did. Sources say that Didi pushed ahead with US listings before it had full clearance. So they pretty much went through the back door without getting clearance from CAC, forcing Beijing's hand. Didi says it had no foreknowledge of security review and says it will cooperate with Chinese authorities. So again, you have another company completely unrelated to Alibaba pulling off dirty maneuvers, which have pretty much pissed off Chinese regulators, and they are now being forced to take action. And again, you look at it, how does this go back to Alibaba? Again, a forced delisting of Didi, again, is causing people to be worried about Alibaba. But this has got nothing to do with Alibaba. Alibaba had their own issues, which has been resolved. They had a $2 billion fine. They've paid it off. Alibaba has now continued with business. And then you've got all of these other Chinese companies that are trying dodgy methods to pretty much get listed on the New York Stock Exchange. You have Chinese companies pretty much hiking after school prices, you know, to increase capital. You have Tencent, who have pretty much admitted to their anti-competitive behavior. Then you have Baba getting caught up with all of this noise and as a result, selling off. You know, investors are selling off their shares. They don't want nothing to do with Alibaba, not realizing that all of these scary headlines pretty much have nothing, absolutely nothing to do with Alibaba. So look, guys, this is my thoughts. This is what's been on my mind the whole day. I'm trying to connect the dots, but I can't really connect the dots. But if you have, please let me know in the comment section below. I would love to hear your thoughts. Remember, again, none of this financial advice. I'm just sharing my thoughts and my opinions. And I'm trying to make sense of all of this madness. It's starting to shape up like a buying opportunity. But I don't know. Just let me know in the comment section below. If you gain any value, please make sure you smash the like button. If you're new to the channel, hit the subscribe button and the notification bell if you want to see more content from me. Thank you so much for watching, and I'll catch you in the next one. Peace.